US stocks could be in for an adjustment period. It could be good for those with cash ready to pounce, while we're seeing strong gains in stocks like Alibaba and BYD. They're up 50 and 40% from their lows. Welcome to the Daily. My name's Jessica Amir, market strategist here with Mumu. Well, we've seen US inflation blow hotter than expected. It's now back up at 3.3%, ringing little alarm bells for US stocks, which seem to have lost their footing overnight. The S&P 500 is now down 0.4%. It's fallen below its 50-day average. In fact, it did that at one stage, but it's moved back up higher off that level. But nevertheless, the fact that it hit that level suggests that caution is in. But some stocks seem unshaken from the noise. We saw Meta shares rise for its 18th straight day. That's a record for any US stock. It's now up 23% this year. And of course, it's trading at a record all-time high. Apple, meanwhile, continues to also move higher. That's also for good reason. Apple continues to benefit from rolling out, finally, their new AI features in iPhones. And Apple is also up 8% since January 2022. Moving to other stocks that moved higher overnight, Intel, we're showing that on the screen. Intel has continued to break higher. Overnight, it broke above a key technical level that we've been watching. It broke above its 100-day moving average. Simply, ladies and gentlemen, that's a pretty bullish signal, suggesting that more highs could be ahead for Intel. Now, the last time Intel jumped above its 100-day moving average was back in September, and that saw its stock jump 31%. So that's something to consider. So why is Intel now moving up? Well, analysts are talking about a couple things. Intel is potentially starting a partnership with the world's largest chip maker, Taiwan Semiconductor Manufacturing. So that's something to consider. As we said, Chinese tech stocks and ETFs, they're in a bull market. Investment managers have been loading up on Alibaba and JD.com and Chinese ETFs since we broke the news, or since the world broke the news about DeepSeek. Now, really worthwhile pointing out that Alibaba, they have been leading the gains. They're now at 50% since January 13. So Alibaba, as we said, Alibaba is not only making progress on their AI partnership with Apple, but they also launched their own AI model. So that's something to consider. Also, BYD has been moving markedly higher as well, almost mirroring the gains that we've seen from Alibaba. But BYD, as we can see on the screen, their stock is about up 41% in 1 month. Just outstanding. Not only is the company looking to form a deeper relationship with DeepSeek, but they're looking to do that so that they can roll out their own version of self-driving cars using DeepSeek. And perhaps that's why Tesla's shares have been on the nose and this stock is moving on up. Taking a longer term or bigger picture view now, we did have that bad US consumer inflation print that's causing markets to be nervy at the moment. Now, the concern is, what if we get another bad inflation print tonight? This is why some investors are bracing for a potential short-term pullback, but that'll probably bring opportunity for stocks, because stocks do seem bullish, indeed on a bullish runway for perhaps this year. That not only do we have US tax cuts coming in, but US company earnings are growing stronger than expected and outlooks are pretty robust too. But we do need to mention that investors are bracing right now. That's why we're seeing investors move into those defensive sectors. They've been buying into consumer staples overnight and healthcare stocks. So we saw that in the US, and you'd expect that today on the Aussie share market today. Meanwhile, investors are continuing to, take profits from other stocks and sectors that have done well. So overnight, we saw investors move out of energy, real estate, industrials, consumer discretionary as well. As for the Aussie share market today, you might be expecting that to ease back off its record all-time highs. We are keeping an eye on consumer inflation expectations. If data blows hotter than expected, that might be another reason for profits to be taken. Gold stocks, as we said, are all the rage, with gold trading at a record all-time high. But speaking about gold stocks, reporting season continues thick and fast. We saw CBA yesterday report better than expected results. And the ASX themselves have reported better than expected results, but the stock on a screen, Northern Star, has reported a lackluster results. It doesn't mean their profit results weren't outstanding though, so let's just bring you those. So Northern Star, as we can see on the screen, their shares have been trading at record all-time highs, and for good reason. Not only is the gold price at a record all-time high, but they just reported record revenues. So their revenue surged to a record of $2.9 billion. But nevertheless, that did miss the market's expectations. The market was looking for more revenue than that. Their underlying earnings, or known as EBITDA, that's what we call it in industry, that rose almost 60% to $1.4 billion. That was driven by higher gold sales and higher realized gold prices. Their profits also rose to the second highest level in history for the company, $526 million, just rounding. Nevertheless, that was slightly short of expectations. So perhaps this is a reason that you might be expecting investors to buy the dip. So everything's moving in the right direction, but it's just not as strong as the market was looking for. Nevertheless, it should bring dip buying opportunities, as we're saying, given that gold prices are expected to move on up to brand new record all-time highs this year. For more information on stocks we've mentioned today, head over to Moo's platform.